And that was how I made over £27,000 in totally passive income in 2024 as an average day-to-day investor. Hello and welcome back to another episode of My Journey to FIRE, which stands for Financial Independence and Retire Early. One of my long-term goals is to earn enough passive income to fund a good lifestyle without the need for a 9-to-5 job. So in this video series, I give an update every month on how I'm investing my money to generate passive income streams, including from stocks and shares, rental income, and savings interest. As years go, 2024 has been a great year for investors. The S&P 500, for example, went up over 25% this year, largely thanks to the astronomical growth of big tech companies like Apple, Microsoft, and Nvidia. There was a huge surge in the demand for gold, which saw gold prices up over 27% this year. We also saw Bitcoin hit the $100,000 mark. I mean, it did drop off by about 15% straight afterwards, but if you were one of the smart ones and cashed out then, you probably earned a pretty penny. So in this video, I'll review how all of my investments have performed in 2024 and compare this to the results of previous years. So let's start by taking a look at the dividends I received this year in my stocks and shares ISA portfolio. We rounded off the year in December with a strong finish, receiving dividends from BAE Systems, Unilever, Shell, BP, my super dividend ETF, a government gilt, which is a fixed interest product issued by the government, sort of like a bond, a dividend from an all-world tracker fund, and an S&P 500 ETF. Altogether, this brings my dividends for December to around £420 and my dividends for the whole of 24 to around £3,400. Looking back over the last 4 years, my dividends have increased by an average of 34% per year. And part of the reason it's been such a big jump this year is simply because I've had much more of an emphasis on investing this year. You've probably seen videos or thumbnails or blogs online about how when it comes to investing, the first 100k is the hardest. But the second 100k then becomes a little bit easier, the third even easier, and so on. And this is due to something called compound interest, what's otherwise known as the snowball effect. So for me, this just looked like trying to max out my stocks and shares ISA with the full £20,000 and then reinvesting all of the dividends. And it was a personal goal for me this year to reach that £100,000 milestone. And to be honest, I didn't think we'd get there so quickly, considering I started in January with £77,000. But as you can see from the graph, I actually reached this goal back in July and we're currently about £8,000 over target. And whilst we're on the topic, let's take a deeper dive into what actually happened with my stocks and shares ISA this year. In total, my stocks and shares ISA portfolio went up by about £30,000 in 2024, finishing off the year at around £108,000. Roughly £20,000 of this was due to money that I personally invested, meaning that the remaining £10,000 was due to capital growth of my investments. It's tricky to tell exactly what the percentage increase in value of my stocks and shares portfolio was in 2024, considering I bought different quantities of shares at different times. But if you exclude the money that I invested, the net return from January to December was 13.7%. So for a DIY investor who's still learning the ropes as he goes, I'm really happy with those returns. I also decided to make a list of my best and worst performing holdings for the year. As you can see, 8 of the top 9 performing holdings in my portfolio were all ETFs, and 5 of the 6 worst performing holdings were individual stocks. And whilst I'm not going to completely restructure my entire investing strategy just based on 1 year's results, it does reinforce my thinking that ETFs are just the safest way to go. I actually made a video on this back in April, describing how I intended to sell off all of my individual stocks to just buy ETFs, as I was convinced that individual investors like myself couldn't beat the market. And it turns out this year I was right, and I probably should have implemented that advice a little bit sooner. So it looks like I'll be doing some reshuffling in my stocks and shares ISA portfolio in 2025 if I want to maximize my gains. And speaking of investments for this year, in 2025 people are seeming to be pretty bullish on crypto. And I think it may be time that I start to get some skin in the game. I'll be releasing a video later this month which is going to be talking about what might be happening to cryptocurrencies like Bitcoin and Ethereum in 2025. In this video, I'll also be discussing what might be happening to other investments like stocks and shares, property and commodities in 2025. So if you don't want to miss that video, click subscribe and hit the bell. But for now, cryptocurrency will have to wait, as I've got plans to splash my cash on something slightly more tangible in 2025. And that is a new investment property. In terms of property, I own a 2-bedroom, 1-bathroom flat in the East Midlands of the UK, which I rent out for £1,275 a month. In 2024, my total rental income was around £15,000, but after expenses and bills and property management costs, this came out at closer to £11,000. And as rental income is just classed as standard income, I'll also have to pay tax on top of this, likely around 40%, which is going to bring those earnings all the way down to around £6,600. And this is one of the many issues with trying to make money through property nowadays. It's that there are so many taxes and expenses that just eat away at your profit. I mean, in 2024, I'm going to be taking home less than half of the money I earn on property, and that's without having to pay a mortgage. That being said, it is also worth remembering that the capital value of the property does also go up. And whilst you don't see the benefit of those capital gains until you actually sell the property, I do still think that is a very worthwhile investment, particularly if you use the property as a home at some point. For example, I bought my flat in 2019 for £182,500, and today the flats that are adjacent to mine, which are exactly the same, are selling for around £250,000. That's around a 37% increase in 5 years. And you might be thinking, yeah, but you would have made better returns if you just stuck that money in the S&P 500, you dickhead. And yeah, that's true on face value, but there are several reasons as to why investing in property is more advantageous than investing in the stock market. Firstly, property is a tangible asset, meaning that you can manage it and improve it and repurpose it for whatever you want to do, unlike stocks and shares, which are unpredictable and almost completely out of your control. Secondly, property can provide you with a relatively stable income, particularly if you find yourself good tenants, unlike the stock market where the dividends can be up and down and change with share value. Thirdly, investing in property gives you leverage, meaning that you can take out money against your property if you want to invest it into something else. You can't do that in the stock market. And that's why I'm currently considering buying another flat, one which I'll live in initially and then rent out after a few years. That being said, I'm still very much an advocate for diversifying your investment portfolio as a whole, whether that's property or stocks and shares, or if you've got spare cash laying around, savings accounts. Last up, we have interest from savings accounts. I'm pretty unfaithful when it comes to which bank I use to keep my savings in, and I've switched banks many times over the years, including Zopa, Atom Bank, Chase Bank, and now I'm predominantly with Monument. And this is purely because I want to keep my cash savings in the bank that's giving me the best rate of interest. I typically find that some banks, they'll hook you in with a tasty looking interest rate, and then once they've got you locked in as a customer and you're not really thinking about it, they'll very slowly decrease the rate of interest until you're just getting a bang average rate of interest. I say fuck that. To avoid that, I just look at the Money Saving Expert website, which tells you what all of the best saving account interest rates are from FCA approved banks. And I say this every time, but if you've got cash lying around and it's just sitting in your bank account, do yourself a favor and open up a savings account. Otherwise, you're just pissing your money away to inflation. Anyway, in December, I received £130.78 from a mixture of Zopa and Monument Bank, which brings my total interest for 2024 to around £2,000. So to summarise, in 2024 I received £3,386.06 in dividends, which is all tax-free, £11,014.21 in rental income before tax, and £2,010.45 in money from interest in savings accounts. Again, that's all before tax. This comes to a grand total of £16,410.72 in passive income since January. My stocks and shares portfolio also increased in value by £10,610.75. And that was how I made over £27,000 in totally passive income in 2024 as an average day-to-day investor. So at 27 grand a year, I'm still quite a way off being able to retire early and comfortably live off this income, especially as none of these income streams are really guaranteed. For example, the stock market could crash one year and I wouldn't receive any dividends, or I wouldn't receive any capital growth. Savings interest may go down and I may not be able to find a tenant for my flat. But this is a marathon, not a sprint, so my goals for 2025 to help continue to build my passive income streams are to 1. Keep working hard at my job to maximise my salary and bonuses so that I have more money to invest. 2. Buy another flat so that I can stop wasting my money on rent and redirect that money into an actual investment that I can benefit from in the long run. And 3. Continue to drip feed my money into stocks and shares every month. So that's it for today's episode and for 2024. If you're interested in joining me on my journey to FIRE, then click subscribe, and why not give the video a like too, as it helps other people find these videos. I'd also be really keen to hear your thoughts on this investment strategy, so if you've got any questions or statements, feel free to chuck them in the comments and I'll get back to you. That's it from me, I'll see you in the next one.